somebody that can provide services in that area. So unfortunately, I can't use Charlie's Termite Company in San Diego for a loan in Maryland, because I don't think Charlie's going to drive 3,000 miles. Again, oh, okay, sorry. I can show you where to get it. Look at the end. The other thing is, of course, just like the other things, it must be listed alphabetically. There's a lot of consumer research here, not by us. All right, let's talk about some of the challenges in the implementation of the loan estimate and the process. So now we have tolerances, which are now referred to as variations. So tolerances, variations, kind of the same thing. So fees that cannot change between the time we issue the loan estimate and the time we do the closing disclosure. Creditor, mortgage broker fees, transfer taxes, fees paid to an affiliate of the creditor or the mortgage broker. That's important. And fees that the borrowers cannot, services the borrower cannot shop for. Those cannot change. Fees that can increase by 10% in the aggregate, recording fees, third-party fees for which the consumer may shop but not paid to an affiliate, and finally fees that can change without limit but that were estimated in good faith, prepaid interest, property insurance premiums, impound reserves, third-party service providers selected by the consumer and not on our service provider list, and services not required by the creditor. So things that the borrower wants to obtain, like a home warranty, we obviously have no control. They've selected the service provider. That can change. We must provide these costs with the best information reasonably available, and that's a standard that's outlined in the regulation, and they must generally be the actual terms of the transaction. The way the regulation is worded, they define did you use the best information and did you produce this loan estimate in good faith? They define that by saying if the costs at closing are the same or less than what you disclosed, then you did this loan estimate in good faith. But it also means you can't pad, and just add fees willy-nilly. And you can't guesstimate. So, and the systems must be capable to capture all the information required to produce. You saw some of the information. We have NMLS numbers now down for the broker and the originator. We have service provider contact information. We don't capture that data today, and we have to have our systems available to capture that data to produce this document. And it gets even more complex when we get to the closing disclosure. The rounding I touched about earlier, but some fields are whole numbers, some fields go to 2 decimal points, some go to 3 decimal points, some go to the nearest whole dollar, others are rounded to the nearest dollar. And of course, again, any affiliate company arrangements, there's 0 variance. So the broker may produce the LE without a creditor's name. I mentioned that earlier. But there's some challenges. So you have a risk that the creditor may not accept that loan estimate. Just like today, you produce a GFE, the GFE may or may not be accepted by the creditor. You have challenges with the names used on the fees because the names have to be consistent from the start to the end. And there's challenges with that loan ID number I mentioned. Now you can produce an LE with a creditor's name, and so what's likely to happen, what our approach is, and I know several other wholesale lenders' approach is going to be, is we'll provide you systems and access to input data and produce the LE on your behalf. So that will keep our fees named the same, put a loan number on the form that will remain the same, and make sure it's accurate for both you and us as creditor. In either case, timing is going to be critical because we only have 3 general business days. Today, as you know, our process is you can provide the GFE to your customer. A couple days go by, maybe 1, maybe 3. You submit to us, you come on, you register the loan, you give us some data and information, and we can accept or not accept that transaction at that time. We don't have that much leeway now because it all will be driven by the date of your application, not the date we receive the application. And that's an important change. And the websites, as I mentioned earlier, you should review those because if you capture those 6 data elements, you have to produce the loan estimate. That's important. I know that some lenders, if you go to Bank of America's website or even Wells Fargo's, you'll see that they don't have an online application anymore. You can put in some information and they'll call you and work with you to complete it, but you cannot apply for a mortgage loan online at either of those 2 institutions. Broker's compensation is not disclosed on the loan estimate. That's a little bit of a change. If you're doing a transaction with borrower pay compensation, that is disclosed on the loan estimate. The accuracy is ever more important. You know, updates to all the parties involved, all of our partners in a transaction. It's very important to keep that information flowing. Closing agents are going to become involved earlier in the process. And of course, real estate agent, our partners have to be vested and understand the process of the transaction. Because when there are addendums to the purchase contract, everybody needs to know, not just at the closing table. Now, I can't stress this enough. We're going to see, the borrower's going to see 3 to 4 of these LEs during the course of the loan. At or just after application. When a purchase contract is received, there'll probably be a new LE issued. When the rate lock is done, and of course, anytime there's a changed circumstance, we'll have to provide a new LE. I just can't stress collaboration. It's so important. And it's even more important as we look at the closing disclosure. This is the second new form that's going to be required. Now, what the closing disclosure does is it combines the truth of lending and the HUD-1 into a single document called the CD, or closing disclosure. The biggest change here is that the CD must be received by the consumer 3 days prior to consummation. So before any other documents are executed, the borrower must receive the closing disclosure 3 days prior to that date. Once you issue the CD, you can no longer issue a loan estimate, and changes to the CD can be done without a new waiting period. 3 situations. If a loan program changes, probably not likely. If you add a prepayment penalty to the transaction, again, very unlikely. Or if the APR becomes invalid and changes by more than 1/8 on a fixed rate loan, more than 1/4 on what's called an irregular loan, which really is most ARMs, those circumstances would require a new 3-day wait. A new 3-day waiting period is not going to be required if there's a final walkthrough and the dishwasher doesn't work and the seller says, I'll give you $500 credit at closing to compensate for the dishwasher. Not a problem. We do need to produce a new CD, but there's no new waiting period. So little nuanced changes at the closing table like that are not going to trigger a new waiting period. Now, if you go through the walkthrough and suddenly there's a $2,500 credit, that could trigger a walk back through underwriting at a minimum, because there's obviously changing the terms of the transaction. If they change the loan amount, if they change the purchase price, that's going to trigger some different things. But generally speaking, the minor changes that can occur at the closing table, are not going to impact us and have a new 3-day waiting period. So the lender is responsible for the data and the accuracy of the CD, which really means the lender is going to prepare the CD in collaboration with the closing agent. The closing agent is not going to prepare the CD, not going to prepare a HUD-1. The closing agent will likely prepare a closing worksheet. ALTA is a recommended document to use. They will prepare that. but the lender, in almost every circumstance I've heard of, is going to prepare this document. You have to provide the document to, if you're doing a refinance, any borrower that has the right to rescind has to be provided the CD 3 days prior to closing. Consummation, I'll come back to that. And on a purchase transaction, only one of the primary borrowers needs to receive it. So if you have a husband and wife, and the husband acknowledges receipt, you're good to go. But he has to acknowledge that receipt and have it 3 days prior to consummation. CD does show greater detail around the closing costs and who is paying those costs. We'll go through it in detail in just a minute. And at this point, the broker's compensation is reflected on the CD, even if it's paid by the lender. And of course, we must redisclose if the terms or costs of the CD change or become inaccurate. It doesn't necessarily require a new 3-day waiting period. So timing's everything. So if your closing date's on a Tuesday, working backwards, disclosures are due to be received the preceding Friday. Now here's where a new definition of business day comes into play. There's a definition in the regulation called specific business day. This definition does count Saturdays. Now that works in our favor, which means, if we were not able to count Saturday in this example, he would have to receive those documents on Thursday. Because we count Friday, because we count Saturday, he will receive them on Friday. And you have Friday, Saturday, Monday. He can close. The loan can be consummated on Tuesday. So it's important that you need to kind of look at your transactions and start working backwards. And in California, it's worse. I'm sorry. Because we're a quote-unquote dry state, which means, of course, we're without water. But it also means you execute the documents and then you get the money a day or two later. In wet states, everybody comes at once, everybody signs everything, and the money's there, and everything happens at once. Done at once. That's an advantage in other states. So if working backwards in this transaction, closing date really might be Thursday, because they're going to sign their documents on Tuesday. They'll be returned to the lender, who could fund anywhere from Tuesday through Thursday, depending on what it wants. It's very important to work backwards and look at those dates. I don't want to scare anybody, but those of you that are in the origination side of the business, think about your loans that are closing, funding today. And then work backwards with this calendar and go, gee, that would have meant it would have had to receive the closing disclosure notice sign. So it's important. So let's take a look at the closing disclosure in detail. You'll see that the first page looks much like the first page of the loan estimate. The very top box, there's a little more detailed information. You have closing, you have date issued, closing date, disbursement date, the settlement agent's name, property address, borrower, seller name, the lender, and some loan information. One good thing here is, unlike today's documents, there's no rate lock expiration on the closing disclosure. So those times, given the market, if you have a rate lock extension at no cost or minimal cost, it doesn't move that APR, doesn't trigger a new disclosure, doesn't trigger a new CD and a new waiting period. Let me back up. The rest of these sections, loan terms, the payment information, the impound information, closing costs, cash close, all are just like on the loan estimate. So those are the same. It's only this top little box that's got a little more information in it. Page 2, that's where we come to the closing costs, just like on the loan estimate. Page 2 on the CD, the closing costs. Now it looks different, and it has a little more detail. You can see that there are columns here: borrower paid, seller paid, and paid by others. The box A, B, C, etc. mirror those of the loan estimate. So a consumer could go back and look at the document, the loan estimate as a CD, and compare box to box. What they also do show when they're paid at closing or before closing and who has paid those. I keep pushing the wrong direction. The next box, services the borrower did not shop for. Here we can see where the appraisal fee is out in the final far column. That was paid by others, likely the lender. Then you have the cost paid by the borrower and when they were paid. The credit report fee was paid prior to closing. And then the other fees were paid at closing. So again, these are services the borrower could not shop for. And again, just as on the LE, must be listed alphabetically. Don't forget. The next box, box C, services the borrowers did shop for. Again, listed alphabetically, and of course, who is paying those and when were they paid. All costs paid to a closing agent or a title underwriter start with the word title. And again, owner's title is not listed here, it's listed under other. Then there's a box D, which again is the subtotal of A, B, and C. The next section, you have other costs. There you have your recording fees. And you'll notice recording fees have a little more detail, deed and mortgage. Here you see the transfer taxes, but they're in this paid by the seller column. And then you have the prepaid items, homeowner's insurance, mortgage insurance, prepaid interest, etc. Well, I gotta learn how to work this thing. The next box, you have initial escrow payments, just like on the LE, and the other fees. You can see quite a few other fees listed here as they became known. And of course, we have things listed here. Real estate commission paid by the seller. Then you have a subtotal of those costs. Then you have subtotals of all closing costs along the bottom, and of course any lender credits would appear here as well. And the owner's title is also listed here as optional. Page 3, now we have the calculating the cash to close. Here it's comparing the loan estimate figures with the final CD figures. It shows closing costs, down payment, deposits, seller credits, and other credits. You'll see the very last item is adjustments and other credits. Those come from a couple other sections I'll show you in a minute. Which now you have a section of form that looks like the old HUD 1, but you can see that there's a HOA dues of $80 paid by, as an adjustment paid to the seller. And here in the next section, you've got some more information, but here you see other credits. Here's where you see the credit from the title company for the discount purchase of the owner's policy. So that's how we reconcile the final cash to close. The discount appears here. And prorations around the taxes, and finally at the bottom, calculate cash to close for both the buyer and the seller. So this document is going to be prepared by the lender or the creditor. So obviously there's lots of data here that we don't capture today that we'll need to get from our settlement agent providers. Page 4, some more information about the loan. Again, the assumption, demand feature, late payments. Does it have negative amortization or not? Does the lender accept a partial payment? It has escrow account information, including non-escrowed items such as homeowner dues. Page 5, much like the last page in the loan estimate, again, we have the total payments, the finance charges, the amount financed, the APR. We have our friend Tip again. Maybe a tip. The more disclosures about the appraisal, contract details, liability after foreclosure, whether there's a right of redemption or not. Again, refinance, tax deductibility. There's another little key block on that form. It says questions. It says, if you have questions about the form or the loan, you can contact any of the parties below. And if they don't respond very well, you get a hold of the CFPB. We'll help you out. So just telling you guys, take care of your borrowers. And then at the bottom, now you have all the contact information around the lender, the mortgage broker, the real estate broker, both buying and selling, and the settlement agent, name, address, San Diego escrow. So you'll come to our website, you'll say, hey, I got a change circumstance, I got a different service provider. Great. You can get a hold of them and get their quotes and give that to us. We'll produce the revised LE.
So the revised LE section B can be revised?
C.
Just C?
Yes.
But I can't revise section B, flood termination?
Yeah, those, yes. You can't revise B unless something else changed.
Okay.
Okay, so go ahead. So, all right, so the question is, I'll finish the question I've had before. So you have appraisal fee and credit report fee in the section that can't change. But we all know in reality, things change. You have borrowers that, the biggest one that changed is the appraiser. You quote $450, whatever standard fee is, and you find out that, gee, it wasn't really a single family residence. It was, basically a hobby farm on 10 acres. And the appraiser calls you and says, I'm not doing this for less than 800. That is a changed circumstance. You now have new information. You can revise that quote. We'll want something from the appraiser, obviously, but that is a changed circumstance. Now, I'll give you an example of what isn't a changed circumstance. You fat finger the keyboard and put in $300 for the appraisal fee, and it's always $450. You're stuck. And the same with the credit report fees. You get a credit report, you get your credit report up front, you do your pre-qual, the guy gets his house. Now the underwriter comes back and says, hey, I need a supplement to the credit report. All right, that's $50. Well, that's a changed circumstance. The underwriter required it, boom, new LE.
Will you provide the things that aren't here for us? That are
Oh, absolutely.
Good. Thank
Whatever
you.
that is.
Yeah, no, there's several of those that aren't in our handouts.
Yes, I'll work with Linnell and they'll actually get a copy of the entire presentation.
Thank you.
Yes, the question is, does the 3-day waiting period for the CD include Saturdays? Yes. And you got to be careful if there's a federal holiday in there, it throws everything out of whack.
If the seller is selecting services, if the seller is selecting the services, but the buyer is paying them and is allowed to shop for them because he's taking the loan, does the buyer actually accept the service, select the services, or can they?
Yes, they can.
Okay, so the seller could not force you to use their services.
Well, the seller can. That's between the buyer and the seller. That's buyer and seller negotiation. We got one. Now we'll get to the back.
Regarding a refinance, as far as the timing, is it now a dual 3-day?